Morning, good afternoon, good evening, wherever you are in the world. Welcome to the Cryllionaire Crypto Podcast. We're chatting with Kevin about all things artificial intelligence and cryptocurrency this week. So, mate, what has popped up on your radar?
Ooh, it is an exciting time to be alive. That's for sure. I'll say that. Besides all the election results, on the crypto side, I'm seeing a lot of prevalence in success and a lot of automated trading strategies. I used to work as a high frequency trader on Asian markets in Hong Kong for many years, worked in investment banking, and one things I see a lot of, and I don't know if you have any insight on this too, is, the prevalence of automated trading in the crypto markets.
Mhm.
Yeah, I'm seeing that to be a very interesting method to produce results in very volatile type of stocks. What about you? What do you think of top of mind in crypto world?
Oh, mate, there's so many interesting projects that I see every day. So obviously I spend most of my time, I spent 30 years reading audited company reports for the stock market and looking into which companies are adding the best value, so which companies to invest into. Um, and with crypto, anybody can launch a coin, right? So
Hmm.
there's thousands more coins being launched every day than there are new stocks coming onto the market because anybody can get
Hmm.
into it. So new projects pop up all the time. I literally don't have all day to read thousands and thousands of reports. So I've got to be sort of applying a little metrics and going, okay, only ones that are this big or this new or operating in this field. Um, and other ones that I think are good, I'll farm out to my team and they'll have a look at them. And other ones that I think probably 80 90% of them are rubbish, so they end up in the bin anyway. But one example is gaming. Like I've played Tomb Raider, I've played Pac-Man back in the day, but I wouldn't describe myself as a gaming person. I've never gone out and bought a PlayStation or an Xbox or any of those sort of things. Um, but I've got one of my friends he's a Hollywood producer, and he's always sort of working on TV shows and movies and that sort of stuff. And he phoned me up and he said, "Have you heard about this gaming stuff that goes on the blockchain?" And I'm like, "Well, yeah, I guess people are playing games and playing Farmville on Facebook and that sort of stuff, but I don't really know much about it." And he said, "The gaming industry is bigger than the movie industry and the music industry combined." And I'm like,
Hmm.
no way, that's not possible because the music industry is huge. Michael Jackson royalties still rolling in after all these years, and Taylor Swift and whoever else, plus all the Marvel movies, and these things make hundreds of billions of dollars. And I said, that can't be true. And I Googled it and went, holy crap, there's more money spent on gaming every year than on movies and music combined. And I had no idea. I guess if you cast your mind back a little bit to when we were all in lockdown a few years ago, you got sick of watching all the shows on Netflix, because it's just passive. You're just watching. And people wanted to feel they were actually doing something. So a lot of people went out and bought gaming consoles and connected them up. And then you have to pay extra money to get the special sword to fight the dragon and makes it easier to kill the dragon, or pay extra money to get the special car that wins the races and things like that. And people spend so much money, unbelievable amounts of money. I had no idea. So gaming, I don't know anything about. I pass it over to the team and say, you guys look at that. That's your purview. Mine is sort of more traditional stock picking stuff. So if someone comes out and it's a new, like, biotech company putting stuff on the blockchain, or um, I don't know, data prevention, data security, data storage, that sort of stuff I can look at because I can basically understand those sort of things because those are the fields I've played in before. But literally, there'd be 10 new projects that come up on my desk every hour. And there's a few that I look at and a few that I go, hey, I want to interview the founder. I want to find out more about this. And that's what we generally uh, try to do as much as possible. And a lot of the coins we do put on the Cryllionaire.com website, where we've actually profiled these and had a look at them and say, this is what they do. This is why we think they're great value. And anybody can find out more information or invest into them if they wish to.
Yeah. Do you have any coin in particular that's of interest to you these days? Or do you have a favorite one that's new?
Uh, Too many to mention.
Yeah.
But I mean, Sui's gone really, really well. We profiled Sui, I think, in August 2023. Um, Someone will correct me by going onto the website and seeing when we did that. But it was more than a year ago that we looked at Sui and went, hey, this is a really good project. Um, and even though we'd investigated the founders, we'd looked at this and we'd looked at that, it's still a risk, right? Any new business is a risk. So we put 1% of our portfolio funds into Sui. And sat back and went, after 6 months, it's doing okay, it's growing. But it was a little bit more than a year later that this thing just took off, because other people discovered that it was good long after we discovered it was good. So it went from 1% of our portfolio to like 6% of our portfolio. And you go, okay, anytime you make 500, 600% return, that's a pretty good year. And then we sell off some of that, take some profits, but we still think Stewie's got a long way to go. So we'll hang on to it. I mean, we got
What's
into
the
Solana when
letters?
it first came out too. Sorry?
What are the letters for Stewie?
SUI.
SUI. Oh, Sui. Yeah.
I'm saying Stewie. Sorry, that's my bad Australian
No,
accent.
no, you're good. Yeah.
Still
No,
be like chop suey.
yeah.
If you're French, you'd
Absolutely.
call it sweet.
Very true. What do you think about all the meme coins that are going out, popping off? Like the hippo coin, did you see that one?
Mudeng hippo coin.
Yeah, I love
That's
that one. I had two friends who are retired now because of that coin,
that's
which is
funny.
just a pump and dump. Like I don't, it's just a meme coin, but
Yeah.
what do you think about meme coins?
Uh, we'll come back to that in a moment.
Yeah.
All right. Welcome back. We're talking about meme coins. I've got a very strong opinion about meme coins. Um, and I've got a very strong opinion about NFTs. We famously
Ooh.
never bought into any NFTs when NFTs were going off a few years ago. And obviously there was NFTs that people bought and sold and made literally more than 1,000,000% on these things. But because I'm an old school stock picker, I look at the underlying value, right? What's valuable there? The artwork was ugly. It was just a few pixels. I didn't like the look of it. I couldn't see. It doesn't do anything. It doesn't help anybody. It doesn't add any value. So we avoided the meme coins. And for a good 12, 18 months there when the NFTs were going bananas, everyone was saying, oh, you're crazy, you're crazy. But then eventually the bigger fool theory won out and the NFTs dropped in value by like 99.9%. So the one that Justin Bieber bought for $1 million, I think he sold for about 1,000. So yeah, we've avoided the meme coins because they don't do anything. They don't add any value. They're just basically nonsense and thin air. The other thing too is you have to jump onto them very, very quickly because they move very quickly. They
Yes.
become popular very quickly, and then they lose their popularity very quickly. So if you're not watching them every hour, like Peppy Coin, Peppy Coin went up like
Yeah.
6,000% and then dropped. So what I look at, for me personally, is I look at what network it's running on, because
Yeah.
meme coins are basically like little cars. They've all got to run on a network in order to do what they do. So we'll invest in the underlying network. So we bought Solana when Solana first came out because we thought Solana was going to be a good competitor to Ethereum. Again, we put about 1% of our portfolio funds into Solana. Solana went up over 13,000%. And we went,
Wow.
interesting. So we sold off and took profits and rebalanced. We're still holding Solana in our portfolio.
Yeah.
But all these meme coins that run on Solana, people are buying them, selling them, doing whatever. Solana's still making money, right?
No
Ethereum
matter
is
what.
still making money from the coins that are built on Ethereum. So that's the value play I look at. If you're a punter, sure, go out and get some meme coins and become an instant millionaire, but you got to be ready to sell at a moment's notice.
Yeah, you got to be ready to lose it all as well. And that's what I love about Boston trading. There's so many people out there who are just, you know, shilling information just to, the get rich quick idea, but really it's a same exact thing as a fundamentals equity stock analyst, right? You guys exemplify your many years of experience doing that, and bringing that to the crypto markets is really an interesting thing, because if you're a traditional conservative investor, you actually have someone who's a fundamentalist, which most crypto people are not. And I do think that is one thing that I'm always impressed talking with you is, it's what is the underlying value versus what it's probably worth. And then you guys usually make a play. So congratulations on those gains. I don't think many crypto traders can say that at all. So you're doing something right over there.
Yeah, we've actually done that. We've made more than 10,000% on 6 different occasions where
Mm,
we've bought into something before everybody else has discovered it. We researched and went, yep, this is a good one. Like Solana is an example where we bought Solana, and it was like probably more than 12 months. We'd probably been sitting on it for 12 months, and it might have gone up by about 100%, but it certainly hadn't taken off. It might have gone from 15 cents to 30 cents or something like that. And we looked at it again because other coins were going much, much faster. We looked at it again and went, is it still good? Is it still good? Yeah, we'll hold it. And then it was probably like 18 months after we bought it that suddenly it took off and went from $1 up to like $100. And we're like,
amazing.
wow. And yeah, it's still going, but we obviously take some profits because, things disappear, things move on. I mean, I'm old enough to have carried a Nokia mobile phone. All of my friends had Nokia mobile phones. We had car kits so we could talk on our Nokias. And then out of nowhere in 2007, the iPhone comes out, and you're hard pressed to find anybody with a Nokia.
Yeah.
Within 2 years, Nokia went from $60 billion market cap to about 5.
Yeah. And that's one thing I realized too, very early on in my career, is that there is a shelf life.
Yeah.
Everything like Apple will be broke someday. Google won't be around someday. Tesla is going to fail someday, right? You can't, unless you're, I mean, maybe not all those guys, like Coca-Cola is going to be around forever, but there is a shelf life, and maybe Facebook and Google will be around forever too. But you know what I mean? There's a shelf life, especially for crypto. Bitcoin probably will be around forever, but those things, there's a certain time. If you feel good about your investment, cash out the principal, let a free ride go. Like what you're saying, do really responsible things. I bought Bitcoin back in 2011, and I should have, once it went up 300x, I was like, great. I made 20 grand as a 22-year-old. This is amazing. But I should have just cashed out my principal of $1,000 and let it ride, right? I made that mistake. That portfolio would be worth $54 million today, right? And because I didn't think of the strategy of reduced risk, I just said, man, 20 grand's more money than I'm rich. Holy cow. I could buy food without worry. I could go, pay my rent without having to worry about next month. This is
Yeah.
amazing.
Yeah.
So that mentality kills. And so it's just important. What you just said is extremely important. Take your principal out and let it ride, right? Or at least take out what you need so you feel more comfortable with a long-term investment.
Yeah, absolutely. We'll take a quick break and we'll come back with some great investment advice. Welcome back. Just before the break, Kevin was telling us how he narrowly missed out on a $54 million fortune. And that's because he didn't read my book. So back 20 freaking years ago, I wrote this book on the stock market, how to choose your own stocks, how to find ones that are going to go up. And it's the same principles we use in the crypto fund today. But if you put $1,000 into a stock or into a crypto and it doubles, great. Take back your $1,000, sell off half of it, and go, hey, now I've got that money, I can do other things with it. Let the rest ride. And it could double, it could triple, it could quadruple, or it could go to zero. And even if it goes to zero, it doesn't matter because you've still got your original cash back. So I think you've made a few people cry with your story.
My rule of thumbs is I just try not to think about things sometimes, or else I just never get out of bed. And there's probably 5 times I missed out on $5 to $10 million, and just better not to think about that. So, and only because I was a young person, I didn't know about how RSU units get diluted. I didn't know about how to negotiate for, better options. I got, just got essentially screwed out of, a fortune because I just didn't know. I didn't have a business coach. You know what I mean? So, what's your advice to any young people out there, around that fear of unknowns? Like, how do you make sure you don't miss out on those big, besides just pulling out your principal? I need to read your book, but I know what I mean. So, I just need the cliff notes real quick so I don't make another mistake.
Yeah, well, and anybody who's listening, they can. My book's still on Amazon, I think, for about $3 or $4. But if you want to get it for free, you can just go to bostontrading.co, sign up for the crypto newsletter, and you actually get the stock market book for free. So when we're doing stocks, there was 9 different criteria that we had for choosing your own stocks. With crypto, choosing your own crypto, there's only 4 criteria because crypto is essentially a bit simpler, which is why there's so many crypto projects, so many more than there are stocks in the stock market. So the crib notes are there. We give them away for free. We teach our strategy for free because not everybody's going to invest with us. And that's fine. Not everybody buys your product. Not everybody supports one business. But the least we can do is share our intellectual property so that people don't lose. There's so many meme coins, there's so many NFTs, so many people lose a fortune. As you said before, there's cycles like the I hate Joe Biden coin, right? That was really, really popular months and months ago when Joe Biden was running as a candidate. But then once he stopped running, no one's going to buy that coin because it became irrelevant, right? The Hawk Tuah thing became very, very popular for a brief moment on the internet, and now people have moved on to Moodang or whatever. So anybody who wants to do those sort of things can certainly use the criteria and make sure you don't lose money. It takes you a long time, whether you're working, whether you're investing, however you make your money, doesn't matter. It usually takes you a long time to double your money or to make the money. And you can lose it all in about 12 seconds if you're not careful. So we're happy to educate you, whether you deal with us or not. We're happy to educate you so that you don't. It's the least.
What's the best way for if anyone wants to get in contact with Boston Trading? How do they just go to the website, bostontrading.com?
BostonTrading.co, sign up for the free newsletter, read half of the stock market book. As I say, it was written 20 years ago, but it's timeless advice. It's still relevant. One day we'll do a second edition and update it a little bit politically. But it's rules of gravity stuff. It's stuff that I had learned over 15 years in financial planning by picking the brains of people who'd been in for 20, 30 years before I got there, and also studying charts of 200 years of the stock market, 200 years of the property market. Really interesting thing when people are looking at crypto, because crypto skeptics out there, okay? And they go, oh my God, it must be a scam. How can you triple your money in a week? How can these things sort of exist? And then things drop by 99%. But it's an interesting thing to know, the stock market has been open for 50, 60 years, right? Say the New York Stock Exchange. It's open 9 o'clock in the morning till 4 o'clock in the afternoon, and then it shuts. It's not open on the weekends. It's not open on President's Day. It's not open on Christmas Day. If you want to buy stocks at Easter time, forget it, because it's closed Friday, Saturday, Sunday, Monday. But crypto is 24/7 because crypto is worldwide. There's Hindus out there who don't believe in Christmas. They're still buying on Christmas Day. People in Africa, people in India, people in China are still buying on Christmas Day, New Year's Day, whatever. So even though the crypto market's only been around for 15 years, because it runs 24/7, there's been more trading time on the crypto market than there has been in 50 years of the stock market. So once you understand that, you go, oh, now I understand why crypto can go up 300% in one day and drop by 70%, because it's compressing time. It's literally, 5 years of trading will occur within a few months because crypto is running 24/7. So once you understand that and go, it's much more rapid wealth creation, it's much more rapid wealth loss, then you get it and it clicks and you go, crypto is just a little stock market. If I follow the rules, I can make money.
How long until Bitcoin breaks 100,000?
According to the analysts, it's going to be before January. So That's what the experts are saying at this stage. There's people out there making all sorts of wild predictions. And, you know, some people are saying 100,000 within the next couple of months. Some people are saying 1.5 million within 2 years. So I don't know.
It's
But
gonna,
I think
yeah.
has to be.
I think personally, Bitcoin's in the end game. You know, it's with the halvings that are coming, I think 100K will be cheap in the
Yeah.
future. So it's not like I don't know. Next time that there's a crypto winter, make sure that you got in, because that was a once in a lifetime opportunity, in my opinion.
Right. I think every day right now is a once in a lifetime opportunity. Like we literally bought in before Wall Street, before the institutions. When you and I got into Bitcoin, it was nerds and geeks, right? It wasn't Wall Street analysts and billion-dollar hedge funds. So right now is still early days. I think, what is it in the US? There's like 8% of people own cryptocurrency, but you know, there's like 45% of people own stocks. So there's still a massive, massive run to come before mass adoption, before everybody's into the crypto market. And everybody owns stocks through their 401k, the Roth IRA, the retirement account, superannuation account. You know, you're in the stock market whether you like it or not. That has yet to happen for crypto markets. So when that happens, the market will absolutely balloon and could quadruple overnight. You know.
Yeah, I
So
agree.
it's still
100%.
very early days for everybody.
So everyone should go put $100 in Bitcoin. You heard it here. Maybe that's not a suggestion, but if you want to, you should.
Start dollar cost averaging is probably a good idea. And obviously, I'm going to show my bias by saying everybody should invest in Boston coin because it's diversified
Yeah.
rather than obviously Bitcoin is great, right? Bitcoin's been around 15 years. It's never been hacked. It's never had any downtime. It's exceeded inflation, but it does have a lot of volatility. And as with stock market, you don't want to be all in on Tesla because Elon might have a bad day. So the best thing is to own 20 or 30 different stocks. And we've formulated the portfolio. So when Bitcoin goes down, there's other things that go up that still make money. So
Can you talk a
anyway,
little bit more about Boston Coin real quick?
very quickly, it's just diversified. It's like your 401k, your Roth IRA, your stock mutual funds. So again, we looked very early on, and 10 years ago, Bitcoin was great, but Bitcoin also could be the Beanie Babies. Bitcoin could have been the Nokia mobile phones or the Blockbuster videos. Everyone thought it was great at the time, but then something new comes out. So we looked at that back then and said, okay, what if something comes out that's better than Bitcoin? Who's going to make money? Well, we don't know because it could be something that's yet to be invented. But when the new thing is invented, people are all going to go to the exchanges. They're going to sell their old Bitcoin. They're going to buy the new XYZ coin. So we invested in the exchanges because they make money when the market goes up or whether the market goes down. They make more money when it goes down because it goes down quicker. We also invested into the fiber optic cables because as crypto became more and more popular, it's going to use up more and more network. So that was some defensive positions. Again, because of our background in picking stocks, every now and then there's a plane crash. Every now and then there's a war that breaks out.
Never know. Yeah.
So we want to make sure we've got the stocks that go up when the proverbial hits the fan. So our investors made money during 9/11. Our investors made money during the 2008 global financial crisis. Our investors made money in the Boston Fund when the pandemic broke out because we owned the fiber optics and we didn't know the disease was going to happen, right? But when it did, all the doctors and lawyers and professionals had to sit at home on Zoom using the fiber optics. Hospitality workers had to sit at home because they couldn't work. They were watching the Tiger King on the fiber optics. So the traffic went up. And while the stock market was in meltdown and Bitcoin dropped at the start of the pandemic, our fund actually went up by 50% because we were invested in the defensive assets that make money when everything hits the fan.
And last question, how do I buy a Boston coin?
Mate, jump onto the website.
On the website? You just go on the website?
Yeah, find out the information there. And if you want, you can book a call with myself or one of the other people in the team and find out more that way.
Oh, nice. Okay, sounds good. Thanks so much for the call.
Fantastic. Thanks, Kevin.
Yeah.
Cheers.
Talk to you soon. Bye.